Hi, let's discuss about tomorrow's Nifty levels. Nifty overall looks like sell on rise. So the market is also last Friday doesn't hold 23,840. So that means 23,850. So from there the market keeps on falling. So 23,600. So if tomorrow the market opens at gap down, say below 23,600, so we have to look for holding 23,300. so the trade between this area, this section is very difficult because you have to look for lower highs, okay, lower highs in the downtrend. So if there is no lower highs and the market is little bit volatile, because there is a news now also about there is a Israel has been bombed on nuclear reactors of UAE at Abu Dhabi. So if the market is volatile, that might show a trend like fast trend. So we have to be very careful tomorrow in making the trades. So I mean, what I mean is we have to be very careful in making trades with position size. So we have to be very careful because the IV is also very high, and when you're playing the options making buy or sell, so you have to be very careful because the drastic movement will be there in the premiums. So considering Tuesday expiry, so to the Nifty expiry, so there will be a drastic time decay in the premium. So accordingly we have to keep in mind and trade. So if the market opens gap up, and if doesn't if the market, the scenario in the market is opens gap up, so this section is very important for us. So anything above 23,850 holds, and for a 15-minute session or 1 hour session, then we will have a confirmation that it is a bullish move. Otherwise market is sell on rise, okay. So now also the market continuously forming higher highs, lower highs, lower lows, lower highs, lower lows. So that is evident if you go through, suppose say another time frames, like now we are in 1 day time frame. If you go to 1 week time frame, it is very evident that the market is falling. And the market looks like based on every rise it is falling, right? Every rise it is falling, but it looks like it is rising. But it rise and fall like that, it go up. It is a chance of going up, but last week it is ended already, so there will be a fresh week now. The next candle will be a fresh week candle. So we have to see how the market reacts. Like suppose goes up, then once it's rise, it can be opportunity of sell, or it can open this level and sell rise, right? Sell rise. So it can be a chance of this testing of these levels. So you have to be very careful, and so look for a forming of lower highs and lower lows. If the market is going down, so accordingly take a trade. So if the market on the weekly basis, it looks like bearish, and if you go for a monthly basis, because we also have to look, because the week is finished, so we have to go for a higher time frames. So on the monthly front, so if you check this trade, it is like it is like the trend is going down, right? So the psychology of the most of the traders will look into this slider, right? So once the market rise, the market is falling, right? So we can check about once if the market rise also, it may tend to fall. So accordingly we have to judge this. So let's see tomorrow how it opens. If it opens very down, and if it doesn't hold 23,600 above, and look for a rise, then it will fall down again. So rise and fall. So if the market holds 23,600 and doesn't fall below that, then we'll go for a bullish up to 23,800, and 23,800 above if holds for 1 hour and 15 minutes and no confirmation of going down, so we can go for a bullish view. So that is how we have tomorrow. Let's have a check on option chain where the build-up is there. So OI build-up, when you go to Nifty OI, change in OI 423 calls and puts is 91. So only 91 lakhs contracts and 423. That means the market is at bearish mode if we see the build up in the calls, right? So there is a calls continuously building up at 23,600, 23,650, 23,700, 23,750. That means that this suggests that the market never goes above. If it goes, then it may be a chance, right? So it is a different thing. So 23,800, 23,850, that means however the market rise, it may tends to go. So if you go with the OI, so but if however it's a build up in the calls last Friday, that means it's a fresh build up, because if you see the puts, there is no build up in the puts, like puts are going down, right? So puts are exiting, wind up, right? So when we see there is a build up at 23,800 in the puts, right? So after this there is no much, compared to the calls, there is no much build up in the puts. So 23,400 puts even negative. So that means there is no much change, but this suggests that there is a build up from the long period. So that may be it creates a doubts that there may be a buy side, right? And so the sellers may should have been gone out and giving it to the existing buyers, or however it is. So when you see the calls, there's a worry about the calls, because there's a fresh build up, so much so that it comes to 1,509 and 1,424 near to the puts. So that means there is a fresh build up of calls, so which suggests that the market will go down, right? So when you check at the PCR is 0.94, that means slightly bullish, slightly neutral, and maximum pain is slightly neutral, it's neutral, and maximum pain is 23,700. So we have to be careful according to 23,700, trading 23,700, right? So either side, so be careful accordingly what we discussed in the chart. If we go to the chart, so be careful. Thank you.